When the banking system began to fracture in March 2023, with Silicon Valley Bank dissolving into panic, the most critical conversation in America didn't take place on the floor of Congress or in the Oval Office. It happened over a private line connecting Washington, D.C. to a skyscraper in Manhattan. The Secretary of the Treasury and the Chairman of the Federal Reserve weren't calling to give orders. They were calling to ask for instructions. They needed permission to stabilize the economy, and they needed the strategy to do it. The man on the other end of the line was Larry Fink. If his name doesn't register with you, that is by design. Lawrence Douglas Fink controls a portfolio of $11.5 trillion through his firm, BlackRock. To put that in perspective, that sum dwarfs the GDP of every nation on Earth, with the sole exceptions of the United States and China. But that visible mountain of money is just the surface. Deep inside BlackRock's headquarters hums a digital oracle known as Aladdin. This risk management operating system monitors an additional $21 trillion for other institutions. When you combine these figures, you are looking at a single entity that oversees nearly 10% of all financial value on the planet. This isn't just wealth, it is gravity. When Fink decides capital should flow into a sector, markets rally. When BlackRock assigns a low ESG score, corporations overhaul their entire identity to get back in his good graces. His annual letter to CEOs is studied with more anxiety than any new federal law, because his letter carries actual consequences. BlackRock is the dominant shareholder in the companies that define your existence. Apple, Microsoft, Amazon, and the banks that hold your life savings. Through a mechanism that few truly comprehend, BlackRock votes the shares held in your pension and your 401k, wielding power over trillions of dollars that Fink doesn't technically own, yet completely commands. The structure Fink has erected, the dominance of index funds, the enforcement of ESG compliance, the role of the too big to fail advisor didn't crumble when the 2008 crash revealed the dangers of centralized finance. It metastasized. It became the atmosphere we breathe. You cannot opt out, because BlackRock isn't just an investor in the market. BlackRock has become the market. They own the major stakes in the media you watch, the tech you use, the pharmaceutical giants that medicate you, and the massive property firms that are buying up the homes you can no longer afford. Fink didn't just build a business. He engineered a new form of stakeholder capitalism, where CEOs answer to a checklist of demands defined largely by BlackRock. It is a world where ownership is slowly being converted into a lifetime of renting. It is a system where competition is a charade, because when BlackRock, Vanguard, and State Street own the biggest slice of every competitor in an industry, true rivalry is bad for business. Here at The Economic of Fallen Empires, we usually look at how great powers collapse, but today we need to examine the new empire that has risen to rule us. Larry Fink's journey to becoming the world's most powerful unelected official began in Los Angeles in 1952. He wasn't born into a banking dynasty like the Rothschilds. He was the son of a shoe store owner. He built his Leviathan on a single transformative idea. After graduating from UCLA, Fink landed at the investment bank, First Boston, in 1976. It was there that he pioneered the mortgage-backed security, bundling home loans into bonds, an innovation that generated massive wealth in the 80s and would eventually burn the world down in 2008. But in 1986, the golden boy hit a wall. Fink made a bet on interest rates that went sideways, losing his firm $100 million in a single quarter. He was blindsided. The complex instruments he had helped create had turned against him because he couldn't see the cumulative risk. That humiliation planted the seed for BlackRock. He realized that the king of the next era wouldn't be the one with the most cash, but the one with the most clarity. He left First Boston and founded what would become BlackRock with a singular obsession: to build a risk management system so potent that he would never be blind again. That system was Aladdin. It could simulate thousands of scenarios, tracking exposure across the entire global economy in real time. By the mid-90s, Fink made the masterstroke decision to rent Aladdin out. Banks, insurers, and sovereign wealth funds signed up, giving BlackRock a god's eye view of the global financial table. They could see where the risk was pooling and where the money was moving before anyone else. However, the true weapon of mass control was the index fund. BlackRock aggressively marketed passive investing, the idea that you should just buy the market through a fund rather than pick stocks. Trillions of dollars flooded in. But here's the trick. When you buy an ETF, you put up the money, but BlackRock keeps the vote. By aggregating the voting rights of millions of passive investors, BlackRock became the deciding vote in corporate America. This power is not theoretical. In 2021, a tiny activist hedge fund called Engine No. One tried to force ExxonMobil to change its board of directors to focus on climate change. Exxon's management fought back, but BlackRock threw its massive voting bloc behind the tiny fund. Exxon lost. 3 new directors were installed against the will of the company's own leadership. This happens thousands of times a year, quietly steering the direction of global commerce. This is where ESG, environmental, social, and governance, enters the picture. Fink uses these metrics as a lever of control. If a company doesn't meet BlackRock's standards for social purpose or climate policy, capital is restricted. It sounds like a moral crusade, but it is a mechanism of compliance. There is no democratic process here. Fink and his circle set the rules, and because they control the money spigot, the world obeys. This influence extends directly to the housing crisis. While BlackRock isn't personally buying every house on your block, they are the largest shareholders in the home builders and the rental giants that are. They profit from the build-to-rent model, where entire neighborhoods are constructed not for families to own, but for corporations to lease. It is the infrastructure of a subscription society. But the moment BlackRock truly became untouchable was during the chaos of 2008. When Wall Street began to melt down, the U.S. government realized they were flying blind. They didn't understand the toxic assets clogging the banks. So they hired Larry Fink. BlackRock was paid to analyze and clean up the mess, managing the government's bailout portfolio while simultaneously holding stakes in the very banks being bailed out. It was a conflict of interest so vast it was simply ignored. They did it again in 2020. When the pandemic froze the markets, the Fed hired BlackRock to manage its corporate bond buying program. The Fed printed money, gave it to BlackRock, and BlackRock used it to buy ETFs, many of which were BlackRock's own funds. This is regulatory capture in its purest form. BlackRock isn't just too big to fail. They are the ones deciding who fails. This leads us to the common ownership trap. If BlackRock and its peers own the airlines, the banks, and the drug companies, why would they want those companies to fight each other? Ruthless competition lowers prices for you, but it lowers profits for shareholders. So industries settle into a comfortable, expensive stagnation. You pay more for your flight, your mortgage, and your medicine because the owners of these companies are all the same people. The system extracts wealth at every turn. You pay interest to banks BlackRock owns. You pay premiums to insurers BlackRock owns. You pay management fees on your retirement accounts that BlackRock manages. And you pay rent to landlords funded by BlackRock Capital. It is a closed loop. Fink has been explicit about where this is going. He speaks of a future where renting is an evolution, not a failure. He envisions a world where your financial life is automated, flowing directly from your paycheck into his index funds. The viral phrase, "You will own nothing," wasn't his, but his business model is the engine making it a reality. At The Economic of Fallen Empires, we analyze the structures that bind societies, and this is the most sophisticated financial binding ever created. BlackRock has achieved the perfect monopoly because it doesn't look like one. It looks like a diverse portfolio. Conspiracy theorists scream about the Illuminati, but they miss the point. BlackRock doesn't need a secret handshake. They have a voting proxy. They don't need to steal the election. They just need to be the only ones capable of managing the treasury. It is not a conspiracy. It is simply the most effective scaling of leverage in human history. So, what is the play for the individual? You have 3 moves. You can submit, buying their index funds and hoping the crumbs that fall from the table are enough to sustain you. You can try to minimize your footprint, owning assets outside their system, like gold or direct real estate, though the walls are closing in. Or you can hedge by owning the masters themselves, buying shares in the asset managers that are eating the world. Larry Fink is in his 70s. Eventually, he will step down, but the machine he built is self-sustaining. The next CEO will inherit a control panel that governs the global economy. You cannot dismantle this system because it has become the foundation of the system, but you can open your eyes. If this breakdown revealed a layer of the world you didn't know existed, make sure you're subscribed to the Economic of Fallen Empires. We map the terrain so you don't walk blindly into the trap. Larry Fink has built a world where you rent your existence from institutional capital. Welcome to the age of Aladdin.